Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning. Good day to you, sir. Well, good day to you, sir. Good grief, you guys. And good morning, Andre, as well. Yeah, talk about the morning. All right, guys. I look like crap. Underneath my eyes, I look like crap. It's okay. We'll get through this together. Let's go to the charts. Oh, auto rollover notification. Oh, it's time to switch over our oil charts, is it? Well, here we're going to 6. I'll leave this one up. It looks like they still got liquidity over here. Okay. ZN. So here, ooh, interesting. Okay, so yesterday we had a little bit of upside action. That was kind of the, well, where were we yesterday? Up in here where we kind of took that long. It actually went like 10 ticks further after I got out. It was kind of funny. Like immediately after I got out and closed the stream, it went. But anyways, it kind of looks like that later on that faltered. They're a little bit lower, kind of pushing, but now in the overnight a little bit higher. I think that there are still concerns about an Israeli counterstrike on Iran. They do believe they will strike within the country. It's the latest I heard. Here's the S&P 500. Was pretty quiet yesterday, actually. That's not necessarily a very good sign, though, right? Kind of a break, and that could just be like, okay, let's go for another leg lower. But they still have a bit to go before they come to like midterm pivot points where all the CTAs go short. Here's oil just kind of trucking along here. Gold and silver is still looking pretty good. Still kind of holding the line higher. And copper looking okay. The Japanese yen. Okay, so here was that spike yesterday that caused us to take that trade. It's kind of been mostly flat. And the dollar is still relatively strong. So, yeah. What does that mean? I don't know. I don't know where that takes us, to be honest with you. And here's Bitcoin. Still kind of down there, but just the bottom of the range. Nothing too crazy yet. I don't think that we should be too concerned about. Well, I want Bitcoin to go down, to be honest with you. To be honest with you, I want Bitcoin to just go down. But, you know, if you're long Bitcoin, I think you have to be too concerned about it being right there. Could just be the range. But if it breaks, you know what could happen. Could have bet that we break lows after Powell's speech yesterday, but it just barely touched them and reversed completely. Okay, yeah, so yesterday Powell had a speech, and the market and the commentariat's reaction to his speech was very odd to me. So when his speech ended, I actually saw some pretty heavy buying in the treasuries and other instruments. Really across the board, everything bought. And then the ES at least retraced that. The ES retraced that. So it's like, oh, he must have said something good, dovish, something like that, right? But then all of the political, well, not the, like all of the people on TikTok, they're like, oh, Powell, his speech is basically like pivoting the pivot. Like they're no longer pivoting. We're going to hold the interest rates up here higher for longer and yada, 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 yada. I was like, the market reaction to it and everybody's reaction was kind of weird. It was like, what the market was doing did not line up with his words. I kind of wonder if it wasn't just like okay, hold off on any of your buying until he's done, just in case he says something scary. And then the rally was like, you know, just relief that it was over, sort of a thing. Because it just didn't completely make sense to me. And the other thing is that they're still kind of thinking that there's going to be rate cuts this year, which I think is funny. Actually, you know what I saw yesterday that kind of pissed me off, to be honest with you? Kind of pissed me off was there was one analyst from JP Morgan, and the reason that it pissed me off was that it was somebody from JP Morgan saying something this stupid. Okay, the guy from JP Morgan was like, well, the reason that we're seeing inflation so high is because the costs of high interest rates are getting passed through into rents. Okay, sounds reasonable at first, until you realize that at the last CPI reading that we got, super core inflation, that is inflation with housing taken out of it, oil taken out of it, food taken out of it, was 7% month over month. A number that's supposed to be like 3. Okay, that's really, really hot inflation. And that's with the housing numbers taken out. So I'm sitting here like, how can somebody at such a big firm say something so stupid? I mean, there is something too that housing prices, well, not housing prices, but like rent prices could be increased by high interest rates. Okay, but I guarantee you, they won't be nearly as high as they'll be if you lower rates too quickly, and the housing market turns into a mad rush again. So the housing prices will just go right back up. You get the inflation again crazy, and you have to bring the rates back up, and now you've got higher housing prices and higher interest rates, right? So, like, how long the IMF last thought? That was yesterday, wasn't it? Double check here. Well, we got a 20-year bond. You know what? It is time to, oh, did I close it? I did close it. We need to go through our flows for today. You didn't realize how much I was. Where have you been, Jiwi? No, I know where you've been. It's good to see you again, though. What is it? Okay. That was weird. I think it's in notes. Stream notes. Oh. Stream logs. There we go. Okay, so we will move today to 2024-04-16, that MD, and then copy the template. Oh wait, let's check. I think the template still has some crap in it. Yeah, it does. Okay, copy template Tuesday. All right. Okay, flows. All right, so today we don't. It's the big thing is this is a light econ news day, and it's a Wednesday, which tends to have higher volume. So if you have like a really passive flow that you want to execute, they are more likely to occur on Wednesdays. So you could get kind of bizarre trends that don't necessarily make a lot of sense, because it's like, shouldn't the market be like not doing anything? Okay, and then we have a 20-year bond auction. Lots of Fed speakers, but those are not until later in the day. And there's still Israel retaliation fears. Oh, and JPY intervention still. That's still one that we got to have on our board. Oh, it's an off day because it's an election, so we got it off. Ah, very nice. Very lovely. Maybe Steve Palmer was asking a more general question, like how long will the IMF be around for? Probably forever. I don't quite understand why the IMF gets so much like conspiracy theory kind of hate, but it has become an important enough part of the financial system that it'll probably always be there. Oh, I gotcha. Yeah, they're doing their little meeting the whole week. All I know is that their report on economic conditions that the market absolutely pays attention to, global economic conditions, was already done and out, and so I don't know if we would necessarily see more flow from that. If that comes, I'm gonna put that down as a flow I'm not expecting, and if it does, then we can put it in news and events, and I'll admit that I missed it. How about that? How about that? Feeling a little bit better. When I woke up this morning, it was hard to wake up. I don't know why. I think no, I have some theories. One theory is that my gut is still undergoing shifts. I certainly had a lot of gas this morning. Not that you need to hear about that. Or maybe it's just that my workout on Monday was really heavy and it's only hitting me now. And now I'm in the nervous system is depressed sort of spot. Then tomorrow it will be super compensating. I need to eat a lot of salt. That's probably what I need to do. Well, not anything else I need to put on here. Well, I need to save it. Saving it would help. Okay, no, so let's come over then and poke around. Supercharged spying provision buried in terrifying FISA 702 reauthorization. I'm sure. Rug pull imminent as Wall Street's most bullish and euphoric since last market peak. FMS survey. Oh, that's kind of old news, right? Haven't they kind of already pulled the rug? Or in the process of pulling it? Hard to say. Hard to say. Futures rebound after 3-day rout as rates drop from 2024 highs. Biden calls for tripling tariffs on Chinese steel ahead of speech in swing state of Pennsylvania. Is Biden finally getting it? Maybe, we'll see. That would certainly help him. I don't know how much, but that could help him. Shall we check out the Twitters? Oh, you know what? I'm just I'm coming here on Twitter and I'm remembering that Futures Trader 71 did his last stream. And all of a sudden I'm remembering that that was going to happen. Am I creating fake memories now? Because when we're reading on Monday, I was like, oh, I was surprised. I'm not gonna read that one. That's funny, but off the beaten path here. Financial savings is a component of wealth, which includes other things like equity prices, housing prices, crypto, etc. Wealth continues surge with all asset prices and can finance spending. He is responding to a chart that Mohammed A. El Arian posted here. Interesting IMF chart on the rundown in savings from the pandemic. And you can see how the savings in the United States came out and went negative very, very quickly. Remember when they all said, oh, when the savings are gone, that's really going to hurt the economy and the consumer and everything? But, like, that is not actually what happened, was it? Note in particular the US relative to other advanced economies. That's very curious. But Fed guy is saying that because people own things, that it's not necessarily reflected in savings, I guess. Can you do a quick run and gold? Well, I don't think that I'm running this morning. I'm too tired to be running. But we can go and look at gold. Let's see here. So the thing I want to point out in gold, and I already kind of did this, but like the thing that we've been pointing out in gold is that they are on a really strong rally over the past month. If we were to go back, let's do this. I'm going to duplicate this chart in a new window because I don't think I want to keep it around, and change this to gold so that we can see gold on a higher time frame. Well, on a daily time frame rather. Okay. Look at that run. Okay, so when it was in 2020, okay, gold had like a quite a run at the very early part of it, and then like as soon as inflation was a problem, it was like down. And ever since then, they've kind of been struggling. But then, starting sometime around the end of February, so for the past month and a half, it's just been like straight up. Look at how aggressive that is. So there is some really wild demand out there in gold. And I think that it's also being supported by central banks are buying some as well. So it was like as soon as the momentum turned long for it, it was just off to the races. Now, can it keep that kind of momentum up? I don't know. I do think that once this whole Iran-Israel thing blows over, because I really don't think that it's going to result in World War III. I think that it could result in more market turmoil, but I don't think it'll be World War III. So when that is over, probably gold will take a little bit of a comeback, you know, like we could come all the way back to somewhere around 2,300. But for now, gold has been looking pretty bullish. Pretty wild to look at the chart. You can blame Costco for the gold rush? Oh, yes, I heard about that. Well, that Costco was selling gold. Yeah. Well, this happened with silver, right? And I kind of got caught with that. Like, I made a good profit on it initially and then lost it. And I think I ended up losing 20% on that overall. But I'm still, I still own a little bit of silver. But once the average person gets involved in something, like, it gets really crazy. This is one of those big like narratives following the GameStop thing that really bothered me was when people said, oh, like GameStop's moving because of these retail traders. Now retail traders can't move. Yes, they can. Okay. Like, yeah, they have less money individually, but when you get a couple tens of thousands of people getting involved in a market, oh my gosh, it's crazy. It gets crazy, and all of them have impact. So yes, I don't think that gold has quite gotten to like the public consciousness. Like, I'm not seeing news stories or I'm not reading about people on my Facebook feed leaving work early to rush down to the gold coin store because they're going to get a shipment of gold this afternoon and they want to be first in line or something like that, right? That's, then it would be like, ooh. Okay, but there's definitely some things happening. I don't know how long-lived it will be, though. The issue is that if the interest rate situation changes, the market becomes concerned enough about inflation that they start to price in more rate hikes, I think you will probably see gold get pummeled again. All right, how did you set your squawks on Twitter? Oh, well, okay, so if you subscribe to Twitter Pro, you get access to TweetDeck, which previously was free, but now you have to have Twitter Pro to have it. And you can set up different columns, and you can say this column is my home, and this column is searching for this hashtag, and this column is for notifications, right? And I create lists, so you can go to Twitter and you can make a list and add a bunch of people to that list, and then set that column up to be that list. So this Squawks is just a couple of accounts I've found that are like new Squawks. Twitter's not as good as it used to be honest. I read a story this morning that like they're making a change to Twitter where if you make a new account, you have to pay $1 to be able to start posting unless you wait 3 months, which sounds like the dumbest idea to me. To be honest, it seems like the dumbest idea to me. So you're basically nobody's going to pay $1. Well, maybe people will pay $1, but I don't think that people will pay $1. So you're basically preventing everybody you're basically stopping Twitter from having any future user growth. And the robots, they will just make hundreds of accounts every day and wait the 3 months and just do that every day so that they have a steady supply of new bots coming online that are past the 3 month time frame. So I don't see how that scheme, if you just had to pay $1 to start posting on Twitter whatsoever, maybe it would kind of help. I don't know. It would depend on how much it hurt your user growth, if it was worth it. I think most people already have a Twitter account though. But that's not going to stop the bots. It just seems like a really, really dumb scheme. It doesn't feel well thought out to me. So who am I to say though? You know, Elon, he's Elon. He does his thing. Whatever. You know what's funny is anytime that Elon comes up right now in my mind, I think about the controversy with his ex-wife that's going on right now. So he was married to indie EDM artist Grimes, and she performed at Coachella, and her set was a complete disaster because she didn't know how to use the equipment, and she didn't have her set prepared correctly, didn't have the files analyzed and everything like that, and it was just it was so laughably bad. Yeah, every DJ's been ripping on her. Pretty funny. I guess she has a good opportunity, like next time she DJs, like everybody's going to be watching it to see if she screws up again or not. See if she's learned her lesson. Well, it is interesting. Probably I missed a little bit with the first 10 minutes. But I'm just noticing here that that doesn't make sense. How come my DOM starts at 25, or at least real prices starts at 25? She was a street performer before? I don't know. I don't know about that. I tell you what, she has some weird music. It's pretty good though. It's the reason that I think that she had so much success though was there's nothing about the instruments or the sounds that she uses that are all that unique, and yet somehow the entire feel is different and weird. There's just a completely different vibe that's very unique, and I think that that's why she did so well. But she's clearly not a DJ, right? Hummus Sowell quotes, if you want to see the poor remain poor generation after generation, just keep the standards low in their schools and make excuses for their academic shortcomings and personal misbehavior. But please don't congratulate yourself on your compassion. There you go. Yeah. Let's see here. Brannigan Barrett tweets, as far back as I can remember, geopolitical risks always drove bond yields lower, and the curve flattened as future growth expectations were at risk. Over the past 2 weeks, with Middle East tensions, the curve has steepened, with long bonds selling off. This signaling matters? Yes. Oh, wait. Okay, he is going to tell us. What is the bond market telling us exactly? Central banks have changed their mandates. Not publicly, but they have... No, I don't think that's what it is. Okay, but they have expressed they will accept higher for longer inflation and are prioritizing the economy over inflation. The result is the market needs to price in a much higher risk premium. Moreover, the front end of the curve is pegged because central banks insist on cutting despite not having finished the job on inflation. Okay, so why would that cause yields to move up and long bonds to sell off? I don't think that that makes much sense. I think that the market is concerned about inflation. They're worried that interest rates will be higher for longer, that they might move over to interest rate hikes. And so they are starting to react to higher inflation now. And it is so strong that it is able to overcome a pretty strong geopolitical risk. Now, I also think that the market is kind of going, you're not going to do anything. Yeah, you're gonna retaliate. You'll do like a tiny little piecemeal strike that doesn't really do anything, and and then maybe it will all kind of die down. I don't think the market believes that this is actually going to lead to World War III, and so that's a part of it as well. Is that they know that in the long run, the bigger deal here is that inflation is not dead. I do think that the market is concerned that central banks have changed their mandates. I think there's some real truth to that. Like, the Federal Reserve is never going to come out and say, we're targeting 3% now instead of 2%, right? That would undermine the whole system so much. There's no way they would ever do that. And Federal Reserve members have pretty much said as much. Kind of makes you wonder, who do you think the next Federal Reserve president will be? Because I don't think that Joe Biden really likes Powell and is likely to replace Powell if he gets the chance. But then there was this Project Veritas video. Well, no, it wasn't Project Veritas. It was James O'Keefe's new media company. This new media company, and they were interviewing with some guy that works at the Federal Reserve. They were doing their secret camera expose where they were dating somebody that was from the Federal Reserve and recorded what he was saying. And this guy claimed that Powell didn't like Trump and felt like he got along better with the Biden administration, and that he wants to be seen as one of the people that stood against Trump. So the whole implication was that they're going to keep the market hot for the election and that it's intentional to help Joe Biden. I don't think it's helping Joe Biden. I think that letting inflation go out of control is the best way to ensure that Joe Biden loses in November. But I digress. Is that true or not? Like, how much truth is there to that? I'm not entirely sure, but I'm thinking that if Donald Trump becomes president, that he'll decide to replace Jerome Powell as well. Okay, so Who will be who? Well, okay, so if it's Biden, probably the top candidate is going to be Mester, right? If it's Biden, probably the top candidate is Mester. There's other candidates, but he seems to like Mester. I think he'd be okay with Mester being president. But if it was Donald Trump, who do you think Donald Trump would make president of the Federal Reserve? I think that the most qualified guy would probably be Williams, president of the New York Federal Reserve. That's the one where it's like him as the choice is too obvious. So I don't know if that one will actually happen. When Donald Trump tried to appoint people to the Federal Reserve Board before, some of them were rejected. Because he could put anyway, he doesn't have to pick somebody from within the Fed, right? Like, you could pick Jamie Dimon. I don't know if Joe Biden would pick Jamie Dimon. I don't think that Donald Trump would pick Jamie Dimon. I think that it would be awfully cool. Because he basically already is the president. I mean, he is the president of the largest bank, and the banks make the money. So, like, he has actually have somebody that's very well qualified. But usually you don't pull them from the private. You don't pull, like, the top guy like that. Sometimes, like, they quit and then they switch over. But Jamie Dimon is getting up there. Like, he will be retiring soon. But that's important because, okay, what will they actually do? Because I do think that there is a risk that the Federal Reserve will say, actually, we're targeting 3%, but not tell us. They'll just continue to let inflation run hot at 3% per year or whatever. And then just like it was when inflation was low, they'll be like, oh, darn, we didn't get it this year, maybe next year. And, you know, nobody will be able to take them serious. In a situation like that, what I think you would see, though, because Brannigan Barrett here is saying, well, you know, the yield curve has steepened and long yields have gone down. I think that what you would see in that kind of a situation is possibly yields rally, because supposedly we are in a restrictive stance. So you would want to cut rates to get to a neutral stance. And you would see gold rally super, super hard. So gold is rallying super, super hard, but we've seen bonds both buy and sell over the past week. It looks like the sellers are winning out, although not this morning. But it's too early to tell this morning. There's been a little bit of long flow. Actually, not a little bit. There's been enough that if I had a reason to think that we should be going long. By the way, what were you saying about alligator? Probably maybe that had to do with Grimes when we were talking about that. I don't know. So anyways, coming back to our flows. Okay, light econ, that doesn't necessarily say that we'll have a trend. Wednesday maybe could mean that we could have a trend both ways. 20-year bond auction, they tend to sell and then buy after the bond auction. But overall, that's a buy. Fed speakers later in the day. I don't think that should affect us during our session. Israel retaliation fears and JPY intervention, those would both be long flows. So I think that with those flows, I could predict a slight imbalance on the long side, but definitely off of the flows, I could take a trade, except for that we're already kind of getting into this is too crazy kind of territory, and it might come back on us a little bit again. But the way that that's looking, we're hearing stuff from the ECB, by the way. Brannigan and Garrett says risk reward is a misleading statistic that you think matters. Reality is it misleads you and puts a bias in your decision making. I could agree with that. I don't know if he's gonna say what I would say though, which is that if you take on a lot more risk than the reward that you're getting, that can really mislead you because it makes you think that you're doing well when you maybe actually aren't. Yeah, new highs and stops triggered. There's a decent amount of volume too on that break. But the question is why? Well, I am seeing with this rise, a rise in the Japanese yen. So it could just be correlation with the yen. What about a good risk reward? Well, the reason why I think that the best risk reward is even risk reward. I think that gives you the best feedback from the market to help you learn and adjust to what's going on. If I was writing an algorithm, maybe I would have it do some of these crazy risk rewards. I don't know if I would have it explicitly do like set target that is smaller than my set stop sort of a thing. But there's it can go quite a bit against you before it fails out because it's using a signal to get out rather than a set stop, right? I'd say it could be misleading in the sense that traders tend to use good risk reward as a reason to make ultimately losing trades. That could be I get what you're saying there is that you could say, oh, well, if I lose, it's only going to be 2 ticks, but if I win, it's going to go completely back across the range. So that must be a great trade. But then that's like not a very good probability trade. And you don't have a good reason to think that it's going to go that way. And so you think that it's a good trade because of the risk reward, but it's actually not. We're going to have to watch the video, guys. Wait, is this a... Oh, no. Oh, that's interesting. He has a new channel for his trader community. I don't know how I feel about this one. I feel like that paying for a trader community / chat is kind of a waste of money. Wow. Dude, there was a lot of hits into that high when that block order came through, wasn't it? Anyways, I feel like that paying for a chat room is kind of a waste of money. But I've seen a lot of pretty decent, reputable people starting rooms like that. And I can see there being something to, having the room be paid as a little bit of a filter. And as long as the amount that you're paying isn't crazy, because it used to be that these rooms were like freaking hundreds of dollars, and it's just absolutely crazy. Like, you're not going to make that back. But if it's just like $30, maybe that's okay. I don't think I ever see myself doing it. I feel like that part of our advantage is kind of being the top public spot, but I sure see a lot of them there. But I guess Tredello has a YouTube channel now, and that's where he posted this, because he's not part of Axia. He was always my favorite guy at Axia, though. Maybe if I play this, we'll see if they have the transcripts. We'll see what he needs. They're still knocking on that door there. 29, though, that could... I kind of am a little bit worried about 29. I'm a little bit worried about 29 becoming a liquidity hole.
Block by.
Whoa, 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 whoa. That must have been, that must be intervention. That's gotta be JPY. I'm still kind of a little bit of afraid of hitting into it, because when we had these yesterday, for instance, you know, like it really went and it came back really quickly. I kind of feel like that maybe I've already missed the opportunity. There was 4.61 was a spot that I just passed on, basically. Let's see what happens. Does John? Oh, of course, we talk about him all the time. I used to have a robot that would repost everything that he tweeted, but it doesn't do it anymore. Not that he tweets that often. I don't think that he posts on Twitter anymore, actually, to be honest. Does he post on Twitter? I don't know. Dude, the fall of Twitter under Elon Musk has been it's really affected us. It really has. It really has. I don't know if it's a good or a bad thing in the long run, but man. Twitter has lost a lot of contributors. I'm kind of starting to think that it's impossible to have a popular social network that is unbiased and free. Because there are too many political actors that want to shift it their way. I don't think you'd ever really see a popular social network that leaned conservative either. Let's see here. So they took back one tick. How is everyone? I am in the corner doing degenerate things again. Oh, that order at 4.2 is a 2400 MBO. Well, look, they just burned right through that like it was nothing. Oh, missed it. Okay, the spot that I passed on is only 5 ticks so far, but okay. Maybe glad that I didn't get filled there. I'm going to let this have a little moment. I do almost certainly there are Japanese yen currency intervention flows coming through here again. I don't know, it's a little bit different from the way that it typically goes in the yen. Like usually it's like there's this insane huge spike and then like that's all there is. But this has kind of been like a little bit slower of a burn. A few points where it just kind of surprises how quickly it moved, but not like a real crescendo event sort of a thing. And the market was already kind of going long on it too, so like maybe that's why I was not didn't catch any hint that it was actually, you know. We'll see. Look, there's back 461 again. Would have only made five ticks and then back to break even. Then what? I'd be sitting in it right now. Would I scratch it, or would I be trying to sweat it out? I think I'd be trying to sweat it out. But I would be really anxious, so I don't think that I want to get in now. Right? So I am watching this video, and he's saying that like your traditional R really doesn't help you unless you're writing an algorithm, because you come in and you say, I'm gonna take 3 ticks risk and 9 ticks profit, but then like you have no control over how far it's gonna go, and you often end up taking only a small one, or you know, whatever the deal is. And so it kind of creates this bias in your mind. So he says to just like forget that. I'm going to guess that he's going to be more like, this is the spot that I think it's going to go to. Well, they're almost back to the 29. So far, though, what it looks to me like is they large meta order, post meta order, mean reversion. Like, I'm not seeing active selling per se. It's just kind of settling back. I guess maybe a tiny bit of selling, but where it's kind of come back to, I kind of suspect that we could come back to 29 and build a hole. You could come back to 26.5 and build a hole, or that was a hole as well, but I'm more interested in the 29. I don't know, man. So if I come back and look at the Japanese yen here, right? Like if that was intervention, they're gonna have to intervene a lot more than that to pull the Japanese yen out of this downtrend. Does that perhaps mean that there's likely to be more? Honestly, that didn't feel like intervention. I do kind of agree with you. I have a hard time seeing what else it could be, but that was not the way that past interventions have gone at all. Yeah, the JPY chart isn't ugly enough, yeah. But maybe they've kind of wised up and have decided to kind of spread their meta order out over a larger time frame to kind of scare people. Because I think that part of what's been happening is that they try and do an ignition sort of a thing, where like they just hit it all at once and scare everybody out. And what happens is, or like what happened yesterday, was it almost immediately comes back to where it started. Doesn't really accomplish anything. So now they're saying, okay, we need to spread things out so that our impact is a bit more lasting. On the other hand, maybe that was the intervention and it's over. And if it's over, then I'm a little concerned about the possibility of it retracing. It's just a big toilet flush. Some money changes. I thought you were going to say, they're flushing money down the toilet or something. I mean, there is, to some extent, this skepticism and argument out there that this kind of currency intervention is going to ultimately be fruitless. When I've looked at currency intervention in the past, I have seen like the market kind of fights it for a while. And it's not until long after the intervention that the currency starts to shift and go the other way. Think about how many dopey retail Forex traders get annihilated in an intervention price sweep. Oh, I'm sure. Oh man. Well, it was giving us 15. They ticked back up 1 tick, and so now it's... I'm not liking this. Every tick in ZN is worth like 4 ticks in the micros. Okay, so I'm going to try this one over here. Yeah, well, one of the things is that I think we have reason to believe that there will be long flows in the market overall. I'd say it's super, super tepid. But so even if Japanese yen intervention is over, that doesn't mean that they can't continue to move up in the treasury. Is just that you've got this huge hole below us that you can tell it definitely is kind of like sucking them up. So got to be a little bit careful with what price we take. I think that they're playing games with it now. So you can kind of seeing it dance between that 30 there a little bit. Micros aren't hitting the 615. Volume is still tracking up in the 30. When it would in the 10, you know, cumulative delta came back a little bit, but again, that I think is kind of just indicative of post meta order impact, right? I don't know, some of that liquidity in the micro seems to be a little bit like seeing it 20 by 25 on the inside in the micro seems a little odd to me. Oh, sorry, I'm showing the wrong screen. This is 20 by 30 in the micro treasury yield 10-year. Not that there's any trades going off, but that seems a little odd to me that the liquidity is higher here. But like, see, they're not hitting the 615. Actually, there's a strong bid there at 30 now. So likely to get my fill at 30 half. No, they're not really hitting the 30.5 either. Oh, now that's interesting. They did hit the 6.5, 33 contracts hit into it, but it did not actually clear that price, and it ticked back down. I think that there's a real risk that they do push back here a little bit to like the 29, or that there's like a false breakout sort of a thing. But let's just kind of let it simmer a little bit. There's definitely a liquidity hole at 30. It might be one of those, you know, let it wait 30 minutes and then go again. Because if you don't wait the full 45 minutes, then you get all these people chasing it. They're all like, oh crap, I missed it. Massey joins Mailer Taylor Green in calling for Johnson's ouster. I find it quite stunning that the hardcore conservatives in the House are trying to turn Ukraine aid into a litmus test. Like, you cannot be a part of the party if you support Ukraine aid, because as far as I can tell, the majority of Republicans do support it. Little bit concerned about that. Big order at 29. Litmus, you're right. It's a litmus test. It's a litmus test. Actually, you know what? I don't know. Where did that word come from? Okay, well, here's the E-mini. The expression is a metaphor based on the litmus test in chemistry, in which one is able to test the general acidity of a substance but not its exact pH. Those who must approve a nominee may also be said to apply a litmus test to determine whether a nominee will receive their vote. In these contexts, the phrase comes up most often with respect to nominations to the judiciary. Oh. That's interesting. Huge boy at 176. Oh, in the 2-year. Yeah, okay. But as far as I understood, Republicans were pretty split on Ukraine aid. So it just seems a little wild to me that it's you can't be speaker unless you say we're never going to bring up Ukraine aid bill. I don't know. I could totally get along with, because my opinion is we should fund Ukraine, but we should get something on the border in exchange, you know? That would be my straight. Okay. So there was a big iceberg at 29.5, 5,600 contracts traded into it. They were not able to clear it. And then as soon as that happened, they came in and bought everything that was on offer, all 3,400 contracts on there, and lifted it and put a decent bid at 30 as well. So something just happened there. It was very subtle, but it's still kind of doing these things that are a little bit like way more solid and aggressive than normal market conditions would ever have. So I kind of suspect that Japanese yen intervention may still be at play at the moment. But let's see. They're kind of still looking like they're going to play with 30. My sim order at 30.5 hasn't gotten touched yet. They did get one order down here, though. I think I'll take that off. I'm trying to think about if we do get a pop here where I'll take the second contract off and then let the third one just run. They're back across 30 again. So, do you see how the offer is kind of having a hard time stacking too much on it? I'd say that the market makers are still pretty exhausted in this area. They needed a tick down to get a good stack. Well, I don't know if they clear 29.5 now after this, because that's where that iceberg was. Then I don't know what's going on. So far, it's stayed within this range. They haven't ticked 29. Now on the yield curve, there was a slight... Oh, okay, they did tick it just now. There was a slight bit of flattening. But then it's kind of looking... After that, it's kind of looking like maybe it's going to steepen back out. But it hasn't happened yet, so I don't know. I don't know what to make of that. There's the one tick down. And they are holding an offer at 29.5 as well, so... Thinking back on that big order, one thing that could happen is somebody says, oh, there must be a really big iceberg there. I'm going to buy it. And so it was somebody else came in and bought that offer. But then there was nothing to it. And so it just kind of did nothing. Maybe that guy bails. And then you come back to 29.5 and you find that actually that bit before had actually filled the iceberg. So now there's not that strong of a bid behind it. Or it could be that the Japanese yen is just kind of coming back down and they're following the Japanese yen correlation. If that's the case, and if Japanese yen intervention is over, they could fall back quite a bit further. In other words, I'm getting a little nervous. I'm getting a little nervous. Gold is looking good. Copper is looking good. Having a little bit of a jump in oil. S&P 500, it's unclear which way they're going. The cumulative delta suggests long. But it's not completely clear where they're going. There's another down tick. Okay, well, now we get to find out how well this works. Because I was kind of thinking, if we fall back, we could fall into this liquidity hole at 29. But then we would probably just be stuck at 29. So if we were to like really fail that 29, like, well, okay, never mind. Doesn't even matter. They're coming back to the 30 already. Really? Okay, well, at least the 10-year and the micro 10-year seem to be fairly well in line with each other today, unlike yesterday. Came back to the 30 and it's back to the 615. Everything is right with the world. They gonna do it? They gonna do it? Becomes a hurdle. So it seems like they're still a little bit hesitant to slam into 30 half, right? So I wouldn't call this one a hey, I got it right sort of a thing, because I think that I kind of listed out like every possible scenario that could have happened in this spot. But remember when I said, hey, wouldn't be surprised if they kind of drop down here a little bit and it's the head fake. And they did come right back to that 30, so there was, I don't think that, I want to be careful, I don't want anybody to think that that means that it's definitely going to go up now, but there was a little bit of a false break out there. But they didn't clear 30 half, so in fact, there's the 29. So it seems like you've got a pretty deep liquidity hole all the way through 29 to 30. Well, the question on with the 2-year, obviously they all kind of want to tick together, right? But the question is, if we do have a move up, which side is going to lead it? Because I'm not clear on whether this is a steepener or a flattener. I kind of think that it's neither. I kind of think that if there's more Yentervention, that it should just be across the curve. And what we're seeing right here is not the same kind of order flow. I would say that I see some signs of bullishness, but it's not the same like they were just eating out everything that was there sort of a thing. So I think if we're going to get above that, you would need to see much more aggressive market orders across the whole curve. But I may just end up taking a loser on this, because it wouldn't have to fall below 29 and me being like, okay, actually the bid liquidity that I thought would be there is not there for me to fail on it, right? Okay, well, so pretty weak bid, so you can kind of see it is the liquidity hold type behavior at 29. Parliamentary elections in Croatia, record turnout since independence. Really interesting. I'm thinking about this like, okay, so what if I had never gotten into this? Would I be trying to get into it now at 29? Not sure I would. I kind of still think that there will be a buy here that will take us up higher, but it might be like way later in the day and way steeper of a drawdown than I'm willing to take. And I just do not like how easily that offer went there at 28.5, or how easily it's stacked there. I'm not seeing explicitly negative flows, so I could try and hang on. But clearly my understanding of the liquidity is not complete. Well, another thing is that, like, some of this feels like, you know, just bad luck. But, like, if it's just bad luck, I shouldn't have even been in the trade, right? I'm going to take the loss on my live trade, and I'll do the degenerate thing over here on my sim one, okay? I'm actually starting to see a little bit of sell volume coming into the 30-year, and the yield curve starting to steepen again. Oh yeah, you know, we haven't talked about Trump Social in a while, but that came back. There's actually been some interesting developments over on that one. So remember before I was like, well, I would be careful about shorting it. Like, I think that probably we go down, but I don't want to be in the way of that thing. But it has come back. And in fact, there has been share dilution. And so I thought that that was worth pointing out, because something that I have found with this kind of a stock is, like, when it pumps like that, and for like no apparent reason, you've got to be careful, because the smart thing for the company to do is to sell shares and make more money. So like it's almost all the way back, in fact. I don't know, guys. I still kind of like it. For some reason, I still think it's going to go higher. I mean, it's either going to go higher or it's going to retrace back to the open. The news squawk guy said aluminium. How did they say that in Croatia? Did they call it aluminium in Croatia? I don't know, guys. That... Aluminage. Okay. Weird. But I don't know if that's alumin or alum. Oh, actually, it would be I don't know. Nim. You have min. So I think that means yours is more like the American pronunciation. See, the American pronunciation is correct because it was invented in America. And the Britishized it. That's an interesting one. I don't know about that one. It kind of seems to me like the market makers are willing to take it both ways here in the micro. And in the Treasury, 28.5 is just kind of like very, very low liquidity. And it's been, you know what? This has been a lot longer than I would have thought, because it's been almost an hour. Well, let's say it happened at 7:10. So let's say it's been 40 minutes since the big jump. The last letter is pronounced like the letter Y in the word yolk, so aluminia. Yeah. Yeah, bro. I like it. There's an uptick. I don't know, man. I just got a sneaking feeling that, like, it's not done. Okay, I'm gonna take one contract. If I start to see those aggressive market orders come in again, I'll take a second contract. Oh, I did get it. Okay, good. Is the S&P 500 going to start selling off here? They're right on the edge. They're doing okay. They're doing okay there. I hate this in Xian. This is probably not actually good trading in Xian, because it's doing this thing where it's like, it seems to me like one tick makes a complete difference to whether I'm bullish or bearish. That probably means that it's actually random and you don't actually have an edge here, you know? See, like 28.5 bid with a strong bid below it. That's like, oh yeah, this is turning around. But now with the 28 being the best bid, they lose the 28 and they touch 27.5, and then it's all downhill from there, right? This action is garbage. Well, it is. So what happened was we had a big move up, possibly Japanese yen intervention, and then that large order subsided, and this is just the liquidity kind of sloshing around after that. And so we're all hitting in here thinking that like there's something to it when there really is nothing to like that area, at least. Okay, maybe there's going to be another leg. Maybe they're waiting, and soon in the next like 10, 20 minutes, they're going to come in with another order. But if they're not, then it probably just continues to be a shit show, right? So yes, we are in the liquidity hole between 20. I don't know if we should extend it down to 28.5. I guess we could extend it to 28.5. There's like the liquidity is like this. There's definitely more liquidity at 30.5 and something like that. I don't think that there is as much liquidity down here as there is up here. So that's why I'm concerned about like, okay, if they fail this and then they start hitting into this, then they can probably, you know, then you have to start watching the volume profile, and they could probably slip back through that area really easily. So you're kind of like nervously on the edge. I don't know, the Japanese yen, when you look at the chart of the Japanese yen, kind of looks like they had a small little attempt to get something going and it failed. And it's over. If I was the Japanese and I really wanted to make something happen, I would be hitting it again. Like, you got to show those shorts who's boss, right? I don't think I've really gotten any favorable ticks on these, though, so... I think you need to work more on the framework instead of homing. Well, but I don't home in on... I don't know what you mean. Only been the past 2 days where I've really homed in on the micro, right? But I think that I'm becoming too speculative, is how I feel. Right? I'm taking this trade expecting the Japanese yen to come in again, and like how likely is that actually to happen? I don't actually know. That's where I think I'm having an issue. There they failed another critical level. Bitcoin to the moon. Well, Bitcoin hasn't done anything today, really, has it? Bitcoin has kind of turned dead again. It's interesting. that downtick, and then there's a big offer there, and it's just kind of holds. Okay. It's like if I come back to this. Okay, light econ news day. Japanese yen intervention, probably put that higher. Wednesday, 20-year bond auction. That's maybe a positive. Fed speakers later in the day. I don't think that that's too big. Zero retaliation fears. I think that I have enough to justify going long, but not enough to be like, definitely think it's going to be long today, right? And it seems like what's happened is we got the long. They had the liquidity hole. Sat through the liquidity hole. And we did not get... we never got the second leg. So I think it's time to give up on the second leg, right? Have to be aware that 108... Well, I don't really care that it shifted at 108, right? Do you find it? It is interesting that they only traded 254 at that. There's an iceberg at 27. Well, 2's enough for me today on the live. I don't think that the trade that I was looking for is happening. I'm gonna be awfully pissed if it does, but you know what? I can always jump in later. Yeah, I probably shouldn't have even taken that second one because really they should not have filled the 29. I really don't think they should have filled the 29. Might still actually. Well, they could come in anytime they want, I guess. But it's been 50 minutes. So I say the longer this goes on, the less likely that they are to come in. I'll keep it armed just in case they do. But I need to actually see it. I need to actually see the market orders come, you know? What happens if market goes no bid? What do you mean by that? Well, if the 26.5 just completely pulls, then the next set of sell orders would go at 26. The spread can widen. Say TLT is dumping. The Japanese yen is basically all the way back down to the bottom. So like if that was intervention, you might see this sort of thing where they are touching a level that the Japanese don't like. That could be another thing. Let's see, downtick. Oh, 2 downticks, huh? Okay. Now there's some big bids down here at 25 half and 25. I'm still thinking back about that. Oh, 108 evens was pivot. for breakout or retrace. I don't think that it hitting that price and stopping there or anything can tell me anything about future orders. I have no evidence to suggest that that sort of a thing will predict future orders. I know that if the Japanese yen or if there is currency intervention in the Japanese yen, I know that that will bring in a lot of orders, but I don't actually know if those are coming or not. So I was speculating that they were going to, and they didn't. At least not at that time. I'm not actually seeing sell orders. It's just kind of like a slow and steady, slide back down. But the cumulative deltas across the board are pretty stable and did not really fall along with price. I guess you probably means that you've got a lot of contracts underwater now. Meh. I think those fear greed indexes aren't necessarily very. Depends on how it's created, I guess. Sentiment indicators, like sentiment studies and stuff, those can be really useful, but lagging. Can you pull up the cost basis? Yeah, we're right at buy cost basis right now. We actually kind of like careened right through it, so I don't know if... If it was like what we had the other day, then it is back to the cost basis and then maybe recovery. But I think this one's a little bit different. By the way, you see this spread? So the 30 here is selling really hard. Okay, the Japanese yen is sitting right on the low from before what we thought was intervention. It's like 1 or 2 ticks above the overnight low. Still that big order, 25. Thinking though, what would have been the good trade? The good trade would have been to be long from the beginning, and then when it got crazy like that, just take out. Should put it in here in trades. So went long after potential JPY intervention, but just got caught in the retrace. Wow, 14K loss at 19 years old on Wall Street bets. That sucks. Pretty big iceberg there. This is probably going to be an area that has some interest in it. I don't know if I have anything that really effectively predicts what we're going to do right here, though. I am seeing the volume in the 10-year looks a little bit better. Oh, I see Octavius went in. Well, that's funny that you guys picked 26, but that right there, I liked that. No. I have not used Bookmap very much. Bookmap's DOM is not quite as good as the Jigsaw DOM. I don't think that the tools that Bookmap has really help you a whole lot in the treasuries. Okay, well, 26.5 is still where the cost basis is, so maybe they went through it. Maybe they're gonna bounce it now. If that's a bounce line, I don't know. I'm getting a little weirded out because if it does bounce here, that will be like what, the third time in a row. And when I back tested this and everything, it was not that good. Okay, so now I am seeing it. At least that 26.5 was one of the most aggressive market buys we've had in a bit. The Japanese yen is still down there, though. Do you think it's more effective for equities? Maybe. I don't know. So like, here's the thing. Bookmap, their chart that they have. What is special about their chart? Well, there's two things that it does. One is that it shows you the liquidity, and it shows you different colors for the liquidity. And two, it shows you these little dots to show you how big the transaction sizes are, right? That focus on the liquidity, I think that can be really deceptive. I kind of feel that puts your focus not necessarily where it should be. I'm much more interested in, like, here we had a tick up, was 500, 23, 1137. Okay, so there are some aggressive market orders clearing offers, but it's not taking a whole lot for them to do it yet. I am seeing market, yeah, thought so. Oops. Bookmap DOM does not provide, well, most of them don't provide data history for the level 2 at least. But anyways, but the reason I like the DOM is it matters how many contracts it took to clear an individual price. And it matters like when it clears it and then it ticks back down, and then the next time that it clears it, how many contracts it took. That matters. I watched that, and Bookmap doesn't show that very well. You really can only see that on the DOM. Here we go. Well, I tell you what, they sure came back quickly. I did see, okay, so now the Japanese yen is kind of coming back, but it is, the treasury is leading the yen as far as I can see. Okay, so now they tried hitting into the 28, and there's an iceberg there. I'm not entirely sure that this move is intervention. This move may just be now like push back against the bear run that was maybe went too far. I am seeing some pretty strong market buying volume in the 30-year though. Well, actually I'm seeing it in the 30 and the 5. It's just not the 10. And it looks like it may be somewhat of a... Okay, so if we're getting a steepener coming through here, maybe what's happening is they're buying the 2 and selling the 10, and maybe that's why the volume's not so strong in the 10-year relative to the other ones. But if that was the case, wouldn't you be selling the 30-year as well? But the volume seems to be the strongest in the 30-year here. There's still that iceberg at 28. They clear it, but it goes bid again. So this is what I'm talking about, right? So if they take it offer again, how many contracts on top of that does it take? I care about that number. Okay, so they took it offer. It took another 600 contracts and now 2,100 put on the offer. So that's a pretty solid take. It seems like that they did overwhelm that iceberg that was on the bid. So now we're kind of like, okay, there was a big bit of transaction. Now we kind of see what the next set of things are going to do. If it's really like correlation with the Japanese yen and the Japanese yen is going to continue to come back up, then I think that we could float up through here and that you could do it without a whole lot. Like I would like to see 28 go bid again with less than 3,000 contracts required to do it. Need to get above 90. Well, 90 is definitely going to be a spot for a lot of price action traders to be like, oh, okay, now the downtrend is over. But I don't care about that. Well, I have to keep this on a short lease, and that, okay, so they went through 27.5 and 27 with 18 and 1,500. That's not good, right? Octavius Bales. That's funny that you both failed at that spot. No trust. Didn't feel like the real move, did it? Like I said, it kind of felt like more like pushback against a bear run that maybe went too far. GC is also short. It's kind of selling a little bit. Okay, the Japanese yen came back down towards the bottom of that range. Interesting. Should have recentered it earlier. Okay, 26.5. to where we started, right? No, it was 25. See, I keep thinking that something big is going to happen, and it's not actually happening, is it? Hmm. Man, if they came all the way back to 23 in the 10, that would be pretty ugly. $23.65. Thousands. 1,400. 1,800. A little bit of liquidity hole kind of action at 26. $18. Seems like a little bit more interesting in the 5-year there. Because it was 18 in the 5-year, but that's a lot more in the 5-year than it is in the 10, relatively, for the 5-year. 1,800 is nothing for the 10-year, but for the 5-year, that's a lot. Okay, we're going to get oil numbers here at the bottom of the hour. Well, this one, it went 10 against and 10 for. So... it's a relatively big swing that we had. And the Japanese yen is just sitting at the bottom again. Japanese sitting over there like, well, we really do need to move this thing, but Seth is short treasury yields, so we're going to have to wait until after 9 o'clock to do it. I think so. There is an earthquake in Japan. 6.2. Hearing over the new squawk. Okay, that was an okay uptick. Only 1571 to take it up. I like the way that the bid came, though. So how many ticks was the cost basis play good for? Well, if you'd caught the bottom of that, it was 7 ticks, but... cost basis bounce. I mean, I kind of feel like that the better play is this is ended. It's going to come all the way back to the cost basis, and then you could have gotten from like 30 to 25. So, 10 ticks. Well, I mean, that's kind of the thing, though, isn't it, Octavius? Is like, it is, as from my it is a calculation saying that that price level is a significant price level for the market maker. But basically, as the market maker, that's kind of an opportunity for you to like square things back up. It doesn't necessarily predict what's going to happen after that, right? As far as my research says, it doesn't predict what's going to happen. Like the idea that it will bounce off of it for a little bit or something like that. My back testing did not support that theory. So probably the better test would be if we come back, if we touch the stop out zone and then we come back to the cost basis, does there end up being more volume at that cost basis than at other prices? That would maybe be the key statistical way of determining, like, is our level actually a thing, or are we just seeing things? Because it's very easy to see it happen 2 or 3 times. So and realize that, like, but we need like 10,000 times, right? Okay, so they lost 26 half, but it's still only 15-18 contracts, so. Why? Combine it with point of control and overnight regular sessions? The bids, when we do tick, seem a little bit better than they were when we were coming down, so there's that. I don't know if areas of high volume are important, Newsy. Or areas of past high volume, are they important? What evidence do we have to suggest that? Still just a theory. But that one, the thing with the areas of high volume is that that's one that we've like specifically tried to test, and like the result that I got was that actually they're not. But that's just maybe like one approach of looking at past high volume, so we could always try and come up with a different test. Okay, so now on this one, this is a little bit different. This is a little bit of a shift, right? Now 2,000 have sold into 26 half. And that bid is staying pretty consistent, so there's probably a bit of an iceberg below it. But the bids are a little bit more confident here now. Whereas before, or at least there's somebody is coming in and buying it. Whereas before it was kind of ticking back and forth and on not a whole lot of volume, and so a lot of that was probably just randomness. Right, but like we're stuck in a range and it ticks up on 1,000, that means nothing, right? Now, if we're breaking out of a range and I see it tick up 1, 2, 3, and it's 1,000 each, then that's kind of like, oh, okay, something happened there because the market makers all pulled out of the way, right? But even better is if we're in a range and I see like they up, but like a ton of volume traded through it as well. That means all of a sudden there are some really big aggressive buyers there. That is the sort of thing that could possibly continue. That could be indicative of a very strong uptrend. Well, there was an uptick in the treasury, but Japanese yen is still hanging out down there. Maybe I'm wrong, guys. Maybe the Japanese don't care. Maybe they've given up. They're like, I guess our currency is going to zero and there's nothing we can do to stop it. Why bother buying it anymore? Okay, so that time ticked back down to 529. So again, that's probably just like market making and noise. If you're a price action trader, you might have read that the trading 27.5 is like a significant thing, but I don't think it actually was. It was good that there was like that bid there, but that was only like one little trade. It's not going to be enough to create like a strong trend up to the highs of the day or something like that, you know. Jiwi says the move is about to happen. Well, okay, so now there's a big iceberg on the offer, but they cleared that. Interesting. They cleared that iceberg on the offer very quickly as well. And it goes offer again. Okay, so here comes oil stocks. Down tick at 26.5. So this range is widening on both sides. That's interesting. Well, those bids are looking a little bit better, but there seems to be more than enough people to sell into them. Yeah. When I look at the cumulative delta in the 10-year, it still looks like maybe they're slightly trying to buy it up. So that dropping there is kind of a little contradictory. A small little jump there in oil off of the oil stocks numbers. How has this liquidity hold been? Well, this one after, it hasn't been too bad. But you come and look at this chart. When you look at this chart, it's kind of like, whoa, okay. What is going on here? I'm not sure. I think that my powers of analysis on order flow are just not doing me a whole lot of justice here, because this was definitely a large meta order long. And then this was definitely like post-meta order impact sort of a thing, right? Was this right here an opposing meta order the other way? Or was this just like the market not doing anything and long slowly giving up? I can't tell. There is a slight little turn here like that it's going up. But like when you look at this, like look, it come back up and then fell back down. Does that really look like something that's gonna like just, you know, all of a sudden jump up to the highs? Well, not without somebody coming in and doing something crazy, right? So I don't know if there's really anything I can make of it. Probably I should just say there was possible intervention in the yen. It was very short-lived. That was the end of it. That's kind of what it seems like to me. It seems like we missed the move and everything after that has been us chasing a phantom, you know? Yeah, Delta was not so aggressive on the way down. That's true. Can you run it on a Monday through Friday pit session? What do you mean by that? Like you want to just run the strategy over the past week? Good uptick. Still say it's kind of within the range. I guess part of the thing, if we were going to go back and like start on Monday, end on Friday, I don't understand. Of course, you always start on Monday and end on Friday. Or do you mean only back test it over this week? I don't know. Part of the issue was there was a lot. Like when we go back to that indicator, or that strategy, there was also like a VWAP thing involved and stuff like that. Like I tried a bunch of different stuff and I was kind of like curve fitting it and so forth. So if we wanted to do something like that, I think that we would need to make like a different setup. Like if it touches the stop out zone and then it comes back to the break even spot, then see if it bounces for a few ticks. That seems like a better test, and I don't think that I tested that. Actually, maybe I did test that specifically, but just pull it up to test it by hand. Okay. All right. Well, let's see here. How would we do that? I think that if we were going to do that, I would maybe want to change it to a 5-minute chart. Can we do that? Putting it on a 5-minute chart. Whoa, what happened there? Oops. Okay, so here's our ZN. So if I change this over to a 5-minute chart, that should allow us to see a little bit more. You also only want RTH. So let's come back and change this and say interest rate RTH. Okay. I think I can rest a little bit easier now that they're at 27.5, but. And then we need to go back. Well, we'd probably want to go back to like last Friday, so like the 8th. So let's see, 1, 2, 3, 4, 5, 6, 7, 8 days. Let's just do 10 days. Here's your move. Oh, I don't know. It's looking okay, but I don't know if it's my move. It's looking better. This is the best kind of like positive order flow. We are getting like that kind of shift I kind of saw up. We are seeing that continue. So maybe it will go all the way up. Let's see. Okay, so we come all the way back here. So what do we want to test it as? Like if we touch the top. So this one, I don't think that this one should count. This one would be like that's the news, right? Okay, so the news, it pushed them into the stop out zone, and then we came back to the cost basis, and then we bounced, and that was worth 20 ticks, right? Here's one where they went into the stop out zone again, and they tried to recover, but it didn't quite get back to the line. And that was very late in the day, so maybe we don't count that one. Okay. Here's one where we had news. Okay, they went to the stop out zone. This time they came to the line and they went all the way across the chasm. They went all the way across the chasm and then all the way back up at some point. So that one would have been a loser. So we're 1 for 1, or we're 1 for 2, let's say. Okay, here's one. That one's a little bit tight, but you might try and say we went to the stop out zone and we came back to it, but that happened so quickly that maybe that one shouldn't count. So maybe you add a thing that is like it has to have been a certain amount of time before, because if it touches this and it touches this within a 5-minute period, I don't know if I actually want to trade that one, right? Okay, here's one where they came to it and they completely crossed both chasms and then some before turning back around. So now we're like 1 for 3, right? Okay, here's one. They completely crossed the chasm, but they came to this line. Wait, there's more days than that one there? I don't know. But that's all pointless because I'm just like doing it like 5-10 times. And like I need to do it like 10,000 times to see if there's actually like really a behavior there. I don't know. There was some times where it bounces off of that almost exactly. Seems like it's a thing. Like, here's the thing. Can you make it rolling, like, just never reset? I think I can, actually. Let's see here. Oh, yeah, just get off of reset on session. There we go. Well, I don't know if that really helps us. You just get further and further off kilter. I would have thought that these lines would have followed down where they were a lot more closely, but it doesn't seem like it does. So I think the big flaw in this model, we exited our trades too early. You think it's going to keep going? Well, I'm still in. That's only break even for me on the day, but whatever. What was I going to say? Okay, so like I think the weakness in the model is I assume that like every bid is a market maker taking on long inventory, and every offer that gets filled is that same market maker taking profits. And then I flip around and I do the opposite, and I say every offer getting filled is somebody market making short and taking on short inventory, and then every bid that gets filled is that guy taking profits. And that's where I come up with these break-even lines, right? What if you stop out? What if the market maker takes a loss and says, okay, I'm just going to hit back out with market orders, and I'm going to reduce my inventory because I don't like how high it is getting in, and I just take a straight up a loss, right? Well, it doesn't factor in that. So I kind of think that every time that you get like a kind of like a sweeping sort of thing like that, that you should basically reset it at that point. Because the market maker's almost certainly gonna like rebalance itself at that point, won't it? I'd love to see some stops and triggering at 29. Well, okay, so 29 was where that first initial pop came. So we haven't actually gotten higher than the pop that Uzi and Octavius caught and kind of bailed on when it came back 2 ticks. Anyways, the reason I put this indicator out, because like, look, if I had a setup and I knew that setup worked and I back tested it and I was running it and everything, I don't think I would have given it to you guys. I gave that one to you guys because it seemed like there was something there and I couldn't figure it out. So I was hoping that somebody else was going to take it and back test it and find something interesting. But it never really happened. So it's still a really interesting way of looking at the market, but I don't know if there's actually a real edge in it or not. 26 was the overnight point of control until about 8:10 my time, that dropped to 23 only to become the point of control again 2 hours later. Well, that's interesting. I did not notice that. Oh yeah, because there was a lot of volume that traded there through a quiet part of the night. And there was kind of like a little bit of a down move in the London session, and then leading into the ES session, we had that kind of jump at the beginning. I think it's been at 28 for a little bit now, so I guess I'll recenter there. You notice that I kind of have this bias that, like, how do I describe this? If it downticks, I like to recenter it again. But if it upticks, I wait to recenter it until it really doesn't make sense anymore. Right? Because it's like, if I see it above my line, that makes me go, oh yeah, I'm making money. That's really good. Right? Recentering bias. I don't like that we weren't able to get above the 29 on that run, but this run may not be over. We got like a little bit of a buy, and now we're kind of in post meta order area again. But I don't know, guys. I don't understand why we're back to talking about specific levels and whether there's something to them or not. Like, I guess it's interesting in the moment, but I kind of feel like that I will start to go and look at those sorts of things and just use them to try and cheerlead my current trade. I don't. It's volume, but so what? Volume is volume. There's volume all over the place all the time. That past volume doesn't necessarily predict future volume. Not the best uptick, but it was okay. Maybe we're in a new cycle where levels make sense. First of all, what evidence would we have to suggest that that would be the case? And second of all, how would we know when that stops? Use it to complement your flows? Well, but I only want to complement my known information with other known information. you know. Okay, so let's back this up, okay? Let's back this up a second. I think that I have a deeper theory here. There's a deeper theory at the heart of things that I think we would have to prove true or false to be able to move forward with some of these other things. Yeah? So here's my deeper theory. My deeper theory is that there is no pattern on a 1 minute time frame where you're looking at a 1 minute chart over the last 20 minutes that effectively predicts what's going to happen. And it doesn't matter if you're looking at volume or price action or any of these sorts of things. There's just too much noise going on in an intraday basis to pull out any kind of real statistical behavior from that. That's my overarching theory. And the time frame there is very important to that theory, right? Because we do know that there's like momentum on a daily basis, for instance, right? So I'm saying You put a 1 minute chart up and you're trying to like look at the last 30 minutes of trade and predict like the next 30 minutes of trade. And I don't, whatever way of analyzing it that you're doing it, my theory is that that is not effective. That it is basically random. I mean, a lot of useful information from you, sure, but just take a shot in the dark at any price. Well, but that is what I do, though, isn't it? Actually, I don't just take a shot at any price. I do look at the current liquidity conditions, right? So, like, let's just say that I like this long and I would want to add a contract or take an order here. What are the current conditions? There's been a little bit of back and forth at 28.5 and 28. So I should be able to get an easy fill at either of those prices. So if I was going to put an order right now, like right this moment, would I do it with a market order at 28.5 or a limit order at 28? I think the chances of me getting it filled at 28 are high enough that it would be worth putting one out there. You might notice sometimes when I'm doing this with the full treasuries on Sim that sometimes I will hit in with the market order and then put a second order just in case I get the fill over there as well, right? And then when it goes through that and it actually ticks against me, I'm usually really mad, right? Okay, so that's like one thing is if I can detect that we're kind of in a liquidity hole, I would really like to buy below the center of that and sell above the center of that. But other than that, it is by the time I realize that there is probably a meta order in there and I try and get in as soon as possible, which is often too soon. And yes, I'm not using the price to predict a trade. I'm merely using the current liquidity conditions to try and get maybe 1 or 2 ticks better of a position. That's it. So that's one thing that I do. Amir says time frame is always a problem in my strategies. So by the way, it did tick through 28 there, so well, I'm not happy with that. I don't understand what's so intellectually discrediting. Well, it's not intellectually discrediting. I mean, wow, the S&P 500 is just like started selling like crazy there. Wow. I mean, I guess it's okay to say I want to take my trades around these things. And that's just maybe, I understand that doesn't mean anything. Okay, here's the, I don't think that's it. So I'm just hearing more stuff about tariffs. I don't know if that's what really killed. Yes. Anyways, if you're using it as a reference point and you say there's no edge in it, but that this is the kind of the spots that I like to take a trade because I feel like that might make it more consistent, but then I'm using other things that I can prove have an edge in it in order to make my decisions. Like, okay, I totally understand that. But what I don't understand is why we want to talk about those specific spots. Right? Like when I read that and I read, okay, 26 was the overnight one to control until 8:10, and then it dropped to 23, and then it came back up again. Okay. What am I supposed to be doing with that information? Because my immediate thought is, okay, that's interesting, but that doesn't help me predict future orders, so I feel like it's not useful. Yeah, I'd say that my bias was long flows. I think though that it should be like the bias should be long flows. Maybe we would see one crescendo. I don't think that my bias should have been like Because I think my bias has been that we would see 2 or 3 legs of long flows, and I think that was probably a little silly. Okay, so if I see volume piling in the direction of your long flows, if I see the right aggressiveness, yes. It's another, I like the uptick, but it's still kind of just... I kind of suspect that the auction will be good today. What if you see the left? Wait, what do you mean by that? And if the highest point of volume for the day is climbing with your long flows, so if I continually see the point of control move up, that I think could potentially be indicative of a large meta order. Yeah. I would say it would be an imperfect one, but it could potentially be. So now I think you're actually starting to draw out something that we could test, right? Now I think you're actually starting to draw out something that we could test. Like we could go in, we could say, okay, here's our indicator that is the moving point of control. So like the chart, you have a line, and as the point of control moves, you'll see it move up. And so sometimes it'll move up really quickly, and sometimes it'll move up a little bit, right? And we could look at that, and we could say, let's say, if we put a moving average on that or something like that to smooth it out, and saw that the slope of it was a certain amount, and that it was changing a lot, that was indicative of a meta order. And then when we see that, we take some measure of trend, like ADX, for instance. We could use ADX, or maybe we could just use CCI. And then we could say, when that happens, do we tend to see stronger trend? And then that could potentially tell us if point of control changing a lot and continually moving higher is indicative of a strong trend. So I think it probably would. I don't know if I could turn that into a trade, but then you would have something that's like interesting and useful, yeah? Developing point of control, yeah. Should probably do that because it's been like 6 months and need to go and like update my point of control sort of stuff. Would be an interesting. We could probably do that on Friday. Let's come over here. Make a new one of these. Wait, what? Yeah, HX to do SPS. So the volume in the 30 years is up, moving all that relatively good. Oh, wait, let's see. I would say it would be indicative of the opposite too. Session point of control for the 30-year hasn't climbed, sure, but the overnight one hasn't. Okay. I mean, that's kind of odd to think about, though, because, because I would say that, like, the buy-sell imbalance has definitely been stronger in the 30-year than the other instruments. But it looks like it's just kind of like an overall thing and not, like, at any one specific price. So if you changed the granularity of it, for instance, that would maybe change. So that's kind of weird. So now all of a sudden I'm realizing that with such an indicator, there could be quantization errors in it. Okay, well, it's the top of the hour, so that means it's time for us to get going, and I think I got some meetings and stuff, so... Looks like I might get another uptick there at 28.5. They might try the top end of the range again. There's that big bid there at 28, making me a little bit nervous. Oh, I have a meeting today. Okay, cool. Thing is to not get yourself into high volume node trades, because then you start, yeah. You don't want to get stuck in a developing liquidity hole. Like, you take the trade just as the liquidity hole forms, which happens a lot, right? That's just kind of how it goes. Oh, I see. Okay, I gotta get going. I will see you guys tomorrow. Stay X.